Hey there, this is for Sunday, May 25th here, and it's been a while, but we finally got the pullback, some kind of short-term pullback, and maybe we could look for going longs here. And here we're looking at the chart. This is basically two charts. The upper part is the symbol S5FD, which represents the S&P 500 of stocks above the 5-day moving average. And basically what I did is I converted the candlesticks into lines and throw in a 3-day moving average, which is the red line. So as you can see right here. So as you can see here, we're back under the 30% mark here. Basically it's saying that 12% of the stocks in the S&P 500 is above the 5-day moving average. So there's a lot of stocks that has pulled back, so we're under the 30 here, which is great. This is where I start to look to accumulate. And now the red line, which represents the 3-day moving average, is starting to bend downward. Now normally I like to see once it crosses over the green line, which is the S&P 500 5-day moving average, cross above it, and that kind of helps confirm that we may be going up on the next leg up as far as short-term swing trading. So we're down in this area. So this is where I start putting on my watch list and putting my alerts up here in this area. So we have more potential upside than downside. Now I can trade sideways for a little while, but ultimately we may be getting a bounce up higher. Okay, and here's the S&P 500 here. Here's the chart here, so you could see the relationship here. See how we pulled back down here, and the indicator, or not the indicator, but this has gone down. The few times that it has dipped below 30 here, you could see it dipped down 30. We traded upward, so we got up here. Last time before that, you see we're down here where everybody thought it was the end of the world. We got the crossover, so we got the move up. So this is where we're at again. So that gives you an idea. Plus we're getting a lot of support. We got the 200-day moving average here in red. The 50 is the blue, and the 20 is the green. So we have the 200 and the 20 right here acting as support here. So if I just zoom in a little bit, you can see right there. Now for whatever reason, if we close below that, then our next target is going to be the 50-day moving average down here, or at the very least a gap fill here. We have a gap right here, so this then would be trading down here sideways, but at least the distance is not that far from here to the gap, so it's worth to start looking for longs. Now here I got the three indicators, the most popular ones, the RSI, but in this case I have the RSI 5. This helps me with the swing trades. I like to buy it when it's under the 50 mark here, and then there's the 30, which turns red right here. So we're below the 50, but not all the way down to 30. Either way, this is where you get good possibilities, or the odds improve if you can get this to dip below the 30 mark and then bounce up. So we're reading at 37 right now. And then we got just the standard slow stochastic, just to give you an idea how it looks like compared to relationships. See, when you get this dip here, you have this low here, and then the slow stochastics, also normal settings, you get this down here as well. So they basically all have the same signals here. But I like the RSI 5 because this is good for swing trading, and like right here in this dip, this doesn't really tell you too much, and this doesn't, it kind of tells you in the middle, so it kind of gives me a little more edge as far as moving up. So that's why I have all these indicators here, just to compare how they look like for the rest of the other people. But my meat and potatoes is RSI 5 and the RSI 2 in this case here. So so this is where we're at. We're looking for a potential bounce now at this area. Now let's look at the whole breadth of the market. Let me just switch over to the other chart here that I like to use, which is this one here. Okay, so this basically there are four charts here. The same thing, the moving average of the S&P 500. The top one's the 5-day average. You got the 20-day average, the 50-day average, and the 200-day average. So this is your major trend here. And what I like to do is look for it to have a reading of 50% or higher. We're back down under 45. See, we were doing good here, and now we just recently pulled back. Hopefully, we need to get this back up here to be considered in the next bull market here. So if we could start getting this curved up, then we may have just seen the low of the year and continue up higher. So we'll have to keep an eye on this major trend. Looking at the long term here, this is the 50-day moving average. This is where the institutional players like to keep an eye on. Anything over the 50 on the 50-day moving average here, the institutionals are more apt to add to the position here, which they are. It's just we get in a normal little pullback here. We are still reading at 59% of the stocks on the S&P 500 is above the 50-day moving average, which is good. We just like to see this start turning up to get the next leg up. Now going over to the 20, which is now the medium term trade, you can see here it's also heading down a little bit. It's at 49% of the stocks are above the 20. So we should be getting a bounce somewhere down here to resume back up to recover on this. If not, we can go a little lower and then it pulls everything down. So it's just a matter of watching. And here again is the 5-day, which is similar to what we had last time on this last chart. And let me just update this little drawing here to show that we're more for the upside, looking for the upturn now. So the market breadth as far as swing trading is it's looking a little more favorable now. All right, so from there, keep an eye on it and look for some potential entries. Alrighty, take care.